The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 4th day of September, and great shows we had earlier on. Hopefully I'll be able to add to that information that you've gotten, and we're looking at a Dow down 250 points. Do you realize that we were up to over 200 points this time yesterday, and now we're down? It's really quite remarkable in terms of the shorter term. How can I put this? The shorter term volatility in relation to the larger term volatility. But most importantly, we're just in a little trading. I'm going to show you something that'll be quite fascinating in a moment. I'm just trying to find something, and there it is. So to go with this volatility and in perfect timing, a week from last night, a week from this coming Thursday, this is the 10th at 6 o'clock. I'm doing a webinar. It's called The Historical Context of Volatile Markets. It's a live event. It's for subscribers only, but in fact, you can sign up and you'll get my newsletter for free for 30 days. Timing, I mean, how could you even ask for better timing in this kind of market environment? Volatility, and what I'll be talking about is both the historical context. Let me just quickly switch to this so I can give you at least an idea of what I'll be looking at. You see that incredible spike to the upside in the weekly chart of the volatility index, going all the way to the 53.29. I call it the China plunge. There were a number of factors, but it was China that exacerbated the move, all right? But wait a minute, we're at 27. We're exactly halfway from that high. Last Friday was the week of the what was the last week of August was the high, and yet now we're at 27.69. And wait a minute, look at the chart pattern of the Dow. Let me look at this. Where are we? Look, let's go back to that Monday, the 24th. On the 24th, the Dow went down to 15,370, but at some point during the day, it was exactly where we are right now, 16,127. How come on that day, the VIX spiraled to the upside, and today, look at the VIX. It's a tiny little thing there, 2770, it's up 2770, up 8%. Hey, up 8% is nothing to sneeze at, but look where it is. It's underneath the high of the first of 3382. What is it telling us, and what is it saying? My interpretation has nothing to do with the mechanics, the makeup. It has to do with only price. And price, since I've watched the VIX for, I don't know, 20 years, 30, I don't know, how long has the VIX been around? A long time. And I'm going to give you what my impression is on the trading methodology that might be the best going forward. That's going into September proper and into October, what it all means, and what has now happened on a weekly basis since we've raised the base, even though we're way off the high. Let me just move this away for a second. See, look at that, the monthly chart. Oh, there's so much to talk about. Anyway, I just want to say that I'm giving this, and I'm going to go through the charts. I'm going to go through the different periods. I'm going to show you my interpretation of Elliott wave. You remember I gave you that Elliott wave? I said this is wave 5 up in the IBB. I wonder if I can find it offhand. Yes, I think I can. Right, is this it? No, it's not. All right, I'll get to it in a moment. But I'll explain to you what I will be doing, why I'll be doing it, and the implications. It's really the implications of what's happening right now. And even though, as I said before, we're only in a a trading range. It might not feel like it. I'm going to show you something very interesting since I've got this chart. Here we go. And then I'm going to run the numbers. Yeah, look at this. This is from back in July the 27th or 20th or something. I showed the chart. I just added this phase 5, and I discussed phase 4. That was that right there. And I said we're in a 5 going up, and we went to 400.79. This I gave. We got a sell signal at 393.10. We've been short the IBB. And why do I bring it up? Because it's part of what the discussion is. How you can use different indicators. Look, the RSI never even went close to its high that it made when the IBB, the NASDAQ Biotech Index, in February of this year, no, February of last year, went to 275. And look, the relative strength is way lower than it was. So these are divergences that are very important. I'm also going to discuss this particular pattern right here that I made a big deal about. Right, let me just get rid of this. I'll show you something else right here. Over the weekend, I'll be showing subscribers a little bit more in detail the type of things we'll be talking about. But you remember, I said there's a good chance that this is wave 3 was going to be completed, and that we'd have wave 4, and I drew down wave 4 down. And then I said at some point, if there is an Elliott wave connection, I'll talk more about it over the coming few days, early next week, then we should see another big rally that takes you above 18,351 for leg 5. But basically in the Chapman wave methodology, what we're looking at in the different monthly charts is something that says, if this really is a peak F, how can you even be thinking of a brand new buy mode going to new highs? We'll talk about that. Let me run the numbers. The Dow's down 16,125, down 251 at 16,125. Hope you didn't fall out of your chair there. But look, we've just pierced in this arch formation, we've just pierced the support of that trend line. That says that the next key support level will be 15,979. I'm going to say to you that I think we're in a trading range. And maybe I'll have time today, but if I have a chance to invert this, you'll see that this could form a couple of arches, have another rally, and then plunge a little later on in September, plunge deeper to test the 15,370 level. That's why this is such an important period. This is why the volatility index is so important. The S&P is down 27. That's huge. Down at 1923. The comp index is down 46 at 4686. Gold is still down. Gold cannot get out of its own way. It's down 4 at 1120. And one of the reasons is that the dollar, DXY, look at this. The dollar is still showing strength. And my suspicion is that as long as the dollar is showing some strength, and that strength is going to bump into a lot of resistance coming up soon, that's going to be the test. And I think as long as the dollar holds up, maybe we're looking at the market, at least for now, holding. Look, the patterns are not quite the same, but you've come off that August the 24th low very sharply. So we're watching, we'll have comparisons to make. Let's go on. We've got bonds. Now, this is going to be very interesting. Why? Because bonds are up. They're up sharply, up 1.11 in the TLT, up 0.90. But wait a minute. In the context of what's been happening, you're way below the 128.92. Let me put that in here. 118, what did I say? 128.92 high. Was that August the 24th? Probably that's when things reversed. So this is very interesting. My contention has been that bonds are going to hold in a trading range just for at least this period. And that it's very difficult to say whether or not yields are going to break to the upside in this environment when historically, after 31 years of a bull market in bonds, how can you not expect a major turnaround? But this is different because you've got the Fed that's been supporting bonds. And you've got a Fed that's afraid of the economy right now. I don't see how they're going to be able to raise. It just, Yellen doesn't always watch the market. That's what I've read. I don't know. I've just read a lot about it being kind of independent of the market, a little bit like the president, who's kind of independent of the market, does his own thing. It happens to be the greatest bull market we've had in a generation, just about. and yet he really rarely talks about the actual stock market. So this is a very interesting period. Then you've got, I just wanted to do, and crude oil is down. Let's go to Ben in Tallahassee. Ben, how are you?
Hi, Basil. Great. Thanks for taking my call.
My pleasure.
I'm looking at energy.
Yes.
Looks like they had a really nice bounce here for the last few days, and I'm looking specifically at the XLE and the USO. If you look at the USO, correct me if I'm wrong, but it looks like it's in peak B.
Correct.
And the stochastic doesn't look too bad right now.
Stochastic's at 74%, and the MACD is still expanding. So let's do this, folks. We're looking at the United States Oil Fund LP. Do you have a position in this? Is this more a market thing, or you?
No, but I'm looking. It's almost looking like I'm ready to pull a trigger on a small amount today.
Okay. So here's what I'm looking at. Normally, as the dollar moves higher, over a period of time, we've seen the dollar moving higher kind of puts pressure on crude oil. There's actually a different relationship altogether, at least the way I read it. I look at it as supply demand. I look at it as excess oil capacity. Really, that's the way I look at it. And I still feel very strongly that overall, for instance, when you look at gold coming down like this, if ever there was an opportunity for gold emotionally, I'm not talking about technically, because if you look at gold, and I have to do, as you can see, I'm trying to put together a kind of a commodity aspect in relation to the dollar, in relation to the world economies. And if you look at the gold, you've got these arch formations. Even gold was looking like it had a great rally. It went from the 1170 area, that was 1172 back on the 24th. And it really skyrocketed on a short-term basis all the way to 1169. That's pretty big. When you look at it in the chart patterns of the weekly and the monthly, it was just a ho-hum thing, and you're on your way back down again. So that's the one commodity. It's an important one. Why? Because in this environment, let me just show you something. I'll talk about this in my webinar to come. But if you talk about this in terms of the VIX index, you would say to yourself, wow, the VIX index under crisis, you'll see that most of the time what we were looking at, we were talking about a bank crisis for years. We go all the way back, 2004, 2005. It was invariably a bank crisis. All of a sudden, the banks are off the radar. My relationship to gold, in a sense, is I treat it as a currency of fear. That's one way. And the other is just in terms of an overall portfolio, the expression has often been that gold should be some part of it just as an insurance policy. I happen to look at it very differently. I say that if the gold is an insurance policy, then it has to be an insurance policy of fear rather than anything else. I can't treat it as anything else at this point because I don't see the trend changing at the moment. So now that's one big commodity. If you're looking at oil itself, and I just wanted to put it into the perspective of the commodities per se, so that I can give you a sense of if there is a rally, it can't just be crude oil by itself. You really have to see a composite picture. So do you have time to hold on?
I do. Thank you.
Okay. We'll be back with Ben in Tallahassee. We're looking at the USO. This is the United States oil. I want to discuss it in the bigger context. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. We're back with Ben in Tallahassee. We're talking about the United States Oil Fund. Basically, the question is, and I think it's a really good question, with the powerful move that we've seen percentage-wise from the low in the USO of 37 point, what would that be? 37.75. Let me just write that in there. 30. I believe that was also the 24th. 75. I'm going to just put 824. I'll have to correct it if I'm wrong. And the move all the way to the 49.33 level in a couple of days. Is that the start of a trend that is going to be a turn that does not retest the lows? In fact, it shouldn't go back to the lows at all. It should stop somewhere around, is at 46.12, just down 62 cents right now. It should start really between 44 and 43 and a half. Should be tremendous support if it gets there. And then it should start to climb towards the 51, 52 level. However, I just wanted to throw one little thing in. The stochastic and the MACD are confirming that. Depends, the day is young, anything can happen. I suspect that there will be another rally attempt at some point. We'll see where we close, because you've got overseas markets open Sunday evening, and we are closed Monday. So you're going to have to, if the market closes really weak, you might get some spillover, and then that spillover could go into Monday and then come back to us on Tuesday morning. So we've got to put that into the the whole
I was going to say, Basil, to that point, what's nice is that it really hasn't been affected that much if you look at what it's done today compared to the market.
That was my point, that it's only down 0.49. Turns out it's down 1%, which is not as much as the other indices. But It's even above yesterday's low. So this is what I'm going to suggest. I'm sorry, I forgot. Did you say you were looking for a position, or you did start a position?
No, I was actually going to I was going to start one today and just looking for your advice, see if you agree with that.
So my biggest thing is I want you to look at it as a bigger picture thing, because if you were able to get in now in the 46s, which is really only 7 points off the low, no, it's 9 points off the low, but 9 points after a low where the last move was from 63 down to 37, but the major move has been up in the 90s and 100s. So this is really the first opportunity to look at it and say, hey, is this a period where even if there's an arch formation in the percentages going from 56 to 52 or 58 is a really nice percentage. So here's what I'm going to recommend to you. It's still a little early. Yesterday in my opening call, we took 3 very small positions, tentative positions. 2 are stopped out. 1 is holding really nicely. And it's kind of telling me a little bit about something, about one of the sectors that might be holding quite nicely. So I'm going to say to you, if you want to start a position, do you ever do options?
Oh, yeah, all the time.
Okay, if you do options all the time, here's my thinking. That there could be 2 ways out. The Think or Swim option show on Tuesday will be a perfect time to really follow through on the option. I'm not an expert in options, trade options periodically, but I used to do a lot in options. Now I don't. And one of the reasons that I don't is because I'm not very good. For a while, I've been very bad at actually following positions. That's why I make them either very long term for myself or very short term. I'm talking about. Well,
I will say this, Basil, though, with the 3 times ETFs and not having to worry about the time aspect of the option, the ETF, I've been doing a lot more of the trades.
That's exactly right. They've changed the picture, and if anyone is using the Daryl's particular methodology, there's another way to do it. And Tommy were talking about that just a short while ago. So there are other ways now. We've got a lot of other ways. Let me do this. I'm going to suggest 2 things. One is that you do start a position in the USO now, realizing that at first, that single leg A, and even though it's at B, it had the characteristic of a single leg A to the upside until the stochastic ran to 74%. Now that it's holding, it's saying, you know what? This might have legs to at least form an arch formation in the daily chart. That's number 1. The weekly chart, the 120 has already made a peak D. It's pulled back below the 200-period moving average. Now it's back above in a B. We'll see if that B can go to a C. But just a small position here. 2 things. One is, by Tuesday or Wednesday, you do not want to see the USO under 1455. If it starts to close under 1455, it says, hey, it's probably the stochastic will pull back to 63% and it could start to fail. But in the meantime, I think that the opportunity to go a little higher is very important. And if next week it actually takes out the high of this week, 1615, that'll be the first weekly strong candle followed by 2 successively higher highs, and that will help the MACD and stochastic. Small position, and on Tuesday or Wednesday, I'll start looking at it as if you want to call again, as what kind of option play. But maybe you should call and find out. But I would start a position, and I would add to that position at 1560 on a close about 1560 in another small position. Hope that helps you, Ben.
Outstanding. Thank you very much, Basil. Have a great weekend.
Thank you.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman. This is the Tiger Technicians Hour. Let me just finish this chart here, show you something. So this is the 2-minute chart of the E-minis. Made a low at 8:45 at 1910.50. The objective of the Chapman wave is to take you to at least a peak D as long as the technicals are improving. Look what happened. It went to peak A, B, C, D. Plop, it comes down, so it goes from that 1910 area to the 1930. These are huge numbers intraday. I'm going to show you the chart in a moment of the Dow. I'm trying to get to my point. And my point here is that you've gone from, at 944, 1930.25 in the E-minis, S&P, this is September still, and you pull back very sharply to 1916, but it's a higher low. And then what do? You scream to the upside, and this time you can go to an E and F, and this is what it does. It goes A, B, C, D, E, and then it pulls back, and then BAP, it goes to an F, and that F is at 1930.75. That is 1930.75 is 50 cents above. So you've made slightly higher highs, you've made a nicely higher low, slightly, fractionally higher high. Now you pull back and trough A, B, C, D, E, and this is trough F. And this pink dashed line, it's usually a pink dashed line, says that there's a good chance that this price is going to come back, test the left side, right side price time match, which is around about by the end of the show, by about 10:50 or so. It's going to be very important. Does it test the low of 1916.25? Does it break it? Does it hold the support and make another one of those cup formations like this? Can it do that? And start another move towards later in the day. You got to realize that people, fund managers at this particular point are saying, hey, I don't like this market. This is not for me. I want to start lightening up. They have to be thinking lightening up. They've had the pullbacks, and you've had fantastic gains. So this leads me to my next thing. Look at this. Here's the Dow chart. Within the context of where we've been, it'll be better to make this a little squashed up there. Let me squash. This is what I show my subscribers every day. So, folks, if you do sign up for my newsletter because you want to come to the webinar on Thursday, coming Thursday, the 10th at 6 p.m., it'll be archived. All that stuff will go with it, and you'll get as much information as you want. What I'm looking at is, look, all we've done from the 50,370 level is we've spiked quite sharply, about a little less than 50% from the previous high, the doji high on the 18th of 17,568 in the Dow. You went to 16,669. Made a doji candle. That was a hint that we were going to be pulling back. My thinking was, yeah, we'd pull back, but we'd have a nice rally to maybe make B and just to go nominally higher into the 16,700s. That was the point where I wanted to start the whole shorting that we've been doing successfully earlier on. I wanted to go back to the short side. I didn't want to do it before then because my thinking here is that this arch formation, let me do this now. I'm going to do, watch this closely. Grab it, close window. I'm going to make a copy of this, and I'm going to make a copy of this, but I'm not going to even tell you what it is. I'm going to say, okay, here's a chart pattern. And I'm going to take it, and I'm going to do this. I'm going to go image, rotate, flip, vertical. And now I'm going to show you what I've got. You see this pattern? Look at that pattern. You've got a cup formation. My thinking was you would make another cup formation, and you would rally a little bit above that, and you try to hit this trend line somewhere around here, maybe the 16,700, high 700s is kind of what I was looking for. It's still not impossible because all we've done, it seems like this is the craziest market in the world. All we've done is we've had that move to that move and whipped around intraday, overnight, and yet we're kind of basically where we were just a week ago. So all I wanted to say in this particular chart was, I don't want to get too carried away on the long side or the short side just yet. Definitely not the long side. We've had a couple of, how can I put it? These are just experimental longs that we took yesterday. I wanted to throw something out, tiny little positions to see what would stick. One is stuck out of the three, and that's important. Days young, that could be taken out. We're still up very nicely from yesterday's entry on a percentage basis. But that's not the issue. The issue is saying, remember the question we had just now, Ben said USO. Well, you can't just have one of the indices in the commodity area start to really skyrocket. Maybe you could do in the grains or the soft grains. Maybe you could there. They have to do with water and all other and weather. This is different. And when I'm looking at the commodity index, look at this, here we go. If I'm looking at the commodity index, and I grab this one that I always look at here, TRCCI, this is the Reuters Equal Weight Commodity Index. What you can see is, in the monthly chart, it looks very much like the gold chart, looks like the oil chart, they all kind of look the same. In the monthly chart, they're all well under the 9-period exponential moving averages. This is something you have to be aware of. Now, you see the little bit of a turn here, stochastics moving up. MACD's not that great. Let me just go to the Shift Control R. Hello, waiting for it to come up. I need you. Anybody home? Doesn't matter. What I'll show you right now is that we've gone almost like a one-to-one. Let me show you this technique that I have in the cup formation. There are times where you can look at it almost like a pattern with the head and shoulders, and you can expect that there's going to be a one-to-one to the downside. Sometimes I have to take it from a moving average, but look at this. We went almost to the penny to the 382 level in this commodity index. Let me put this down as red so you can see what I'm looking at. Let me make this one green. I have no idea why that one got stuck. Let me just go. So my point being that we're at an area where there should be some support, and there is. But you can't have just one good candle. And today at 4 o'clock, the weekly candle will close and is closing well under the 9 EMA and is closing under the high of last week. So that's the reason why I'm saying you can only have small positions in counter trend moves at this particular time. If I run the numbers, I think I have a problem here. Let me just see what's going on. That's good. Everything's fine. Should be there. Control R. Hello. There it is. Come on. All right. For some reason, I'm not getting the daily chart. It's there, but anyway, it doesn't matter. What I wanted to show you is, look, GE had a fabulous move from the, I don't know how many trades there were, at 19.37 back on August the 24th. But most importantly, look at this fantastic candle going all the way above the low of the previous week's candle right there at 24.56. And it had a very good week. Even on a weekly basis, just underneath the 200 period moving average now says GE is holding pretty darn well. When in fact, for me, it's a market indicator stock. I have no idea why this is happening. All right, what we're going to do is, what's the time? So I've got a little bit of time to go before, you know what? I can ad lib very easily. I'm just going to close this window, yes to all. So the GE, my Dow quartet, GE, IBM, Triple M, and UTX. Horrible. These are cyclical stocks and they are getting hammered. So when I put that into context, I say to myself, if the leading stocks in the Dow, which I know many of you say, yeah, the Dow, it's history. It's 30 stocks. You got 500, you got 2,000 in the New York Stock Exchange. Hey, all I can say is that I've done this for long enough. I know that where the Dow goes, even if it's like in January, March of 2000, Dow topped in January, the NASDAQ went way higher and the S&P into March. And at some point, they're all going to come together. And all I'm saying is, look, GE, monthly chart, it looks hazardous to your health and wealth, but it is holding okay. Why? Because of this. If it never had the wick of that candle, I'd say, gee, this is just a sideways consolidation. The market should be doing that. But in fact, it did make that low. We've got to accept the price is the price. Look at IBM. Now, this is old hat. This is old technology. You know, it is still an important stock, and the trend is down in the long term. The trend is down in the intermediate term. Trend is down in the short term. Wait a minute. What about Triple M, which was up until just 8 months ago was one of the leading Dow stocks at all-time highs? Well, it's holding very well. It does have a Chapman Wave Roman candle last month, but it's made the arch formation in this entire move down. It hasn't broken the 130.60 area. You've got another cup from arch formation in the daily chart. The weekly suggests that there's still more to go to the downside. Now I want to talk about the picture that I'm going to present a week from last night. And that's going to say, look at UTX. Did break down. And this is a big stock, United Technologies, in many areas, underneath the 200 period moving average. So this is what I wanted to discuss. I'm going to pull up this chart here of the Dow as I do that. And this time I'm just going to squash it like this. I want you to get the whole big picture. So here we go. And I'm going to open it up like this. Why? Because I want you to see where we were, what we've done for an entire year. Remember the low of October last year, 15,855? We've made this huge arch formation. Within the context of this arch formation, breaking to a lower low of 15,370, 500 points lower than the left side low of October. Look what we're seeing. The stochastic, the MACD, did go to lower lows and looked much worse than the October 2014 low in the daily Dow. But the MACD and the stochastic, in fact, have bounced back quite strongly. And you have a situation that says, on the downside, there's a lot of room for the MACD to deflect and go lower. And the stochastic, remember I said that I believe that in this move down, I said about 2 weeks, 3 weeks ago, that we will see single-digit percentages in the stochastic and the daily. That'll be our first tip-off that this is a very serious pullback. And there you are. We went down to 8.67 back on the 24th. Now we're all the way at 41%. So here's my thinking, that there's a chance. I am looking for the 15,370 level to break. But there's a chance based on, now I'm going to have to just switch for a moment because I want to talk patterns here. Look at the SPY. Remember I had a call the other day about the SPY and I was discussing the price volume spike low? To me, that is really important. And we've seen periodically where this particular pattern says the downside for the moment is done. I call it an internal low. But then there could be a rally that doesn't give you the huge percentages, but it just makes it very frustrating for bulls and bears. Why? Because it starts to reach a cap on the upside, 199.84, I believe 199s to 203s could be a cap on the S&P right now. But you could bounce around a little longer as you use up time building up momentum for hedge funds to, a lot of them, I think, miss the seriousness of the down move. My thinking is that there will be enough of an upside move in time and a little bit in price for them to reset and restart the short side. This is just my thinking. Price is the determinant of a trend. And believe me, if we take out on the SPY 190 and on the Dow, I believe it was, there we are, a close below 16,000, I have to look at this as saying, maybe we're going to fail now. We could get the arch formation, but it's going to come from lower down, above 15,371, but lower down. And then we'll make another arch and frustrate. This is my thinking. Thinking, doing, implementation, and chart formations can be mutually exclusive, or they could all come together. They came together at the top. We were getting signs of the rotation at a peak E in the weekly chart. Came together in different sectors. But I think there's just enough energy left. And the way I'm looking at it, we'll know at the end of the day when Friday at 4 p.m. it closes, you can look at the weekly chart. But we have not gone, when we start to trade 2 out of 3 sessions, consecutive sessions, in the daily below 16,000, that weekly will be impacted in such a way that it will say, we are going down towards the lower part of this wick, of this candle. And that'll implement a signal in the monthly chart that says, uh-oh, now we're going to fill in that leg, that wick. That's the way I'm looking at it. Now, you remember the chart I was just showing you a few minutes ago? And I said that there should be some kind of support. Look what happened. There's the 120-minute chart. When the price starts to turn and you take time rather than just price, you can usurp enough energy to hang around to make it frustrating to see left side support levels broken. And that's exactly what we're looking at. We have here just a mini, I don't see any real signs of a sudden break to the upside, but we have signs of at least a mini cup formation right there. And because it hasn't broken to the, what did I say, it was 1915 level, 1916-25 level yet, it says there's just enough strength to try to test the left side E-mini at 1925. See, I'm trying to put the chart patterns together in relation to, this is a 2-minute chart. If you want, I could grab the 15-second chart. No, we're not going to do that. Not now anyway. But I wanted to show you that these chart patterns, is there anything so dissimilar? Look at this chart right now. I'm going to grab this chart right here and say to you, hey, look at that chart. Is that bullish or bearish? Forget the color of the candles. And you would have to say, it's right at this particular moment. It's perhaps a little bit more bearish than bullish, but it is so far in the trading range holding the 9-period exponential moving average. Remember what this is? This is the upside down chart of the Dow. All right, I'll be back. Basil Chapman down to
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi folks, we're back. So right here on the front page of TFN, you'll see the historical context of volatile markets, a live event, and right there, they say right there, subscribe event. So click on it. It's Thursday, September the 10th at 6 p.m. And you'll see information about it. And of course, you get a free 30-day trial to my newsletter called The Opening Call. And I will, I have to leave very early tomorrow, so I hope that tonight I'm going to have a chance to update, at least to give a whole bunch of charts that I can show you. And in preparation for Tuesday, what we're looking at, that's usually what I try to do Saturday and Sunday before the market opens, so you have time to read it. Now, what I did do is a mistake. I said bearish instead of bullish. This is the chart that we were looking at. I forgot the black candle is supposed to be a green candle because it's upside down. So that green candle says, hey, we should come around and make a second little cup formation and try to test that candle high. But if we don't do that, and by the following session, that'll be Tuesday, we've not broken that low, but instead there's a rebound, and the rebound can go even into 1/3 of that candle. It says the pattern that we've got to look at, whoops, let's move that away, is going to be the downside. And in fact, if you're close towards the low of the day and there's just a horrible Sunday night open and Monday's lousy overseas, then Tuesday you got to expect that we're going to be taking out 15,528. How can it be 15? Yeah, 16,000. I didn't mean that. I mean 15,979 is what I meant to say. That low of the 1st of September. Meanwhile, back at the ranch, the way that we came down for those powerful candles, and this Chapman Wave Roman candle right here in the Dow, this one right there on the 24th, it says that we've seen enough times where there's been a very accelerated turbocharged move to the downside with a reversal that really just collapses the VIX index. And that VIX index, look at it now, this is going to be a Friday close. So far at 27.96 in the daily has just been in the lower part of the range here. It's surprising that it is, but the day is young, as I say. If by the end of the day we're up in the 30s, all of a sudden you'll see a candle following that very sharp reversal candle, which is a little different in the weekly charts to many others, because usually the candle after the major top is a powerful down candle and you stay down for a while and the market rallies sharply. This could be the first time that you're making a high-level consolidation in the volatility index, meaning that the buying pressure of the VIX, which is inferring selling pressure in the market, is enough to hold it steady, indicating that regardless of the mechanical makeup, look at the price. That long wick candle of this week, up and down, closing somewhere in the middle, says you have not got the premium shrunk out of the VIX yet. There are enough people wanting to buy it as insurance, and that's going to contain the downside at the moment for the VIX, but it allows the upside to be expanded. Okay, put it simply, market-wise, I'll go to the SPY because many people look at the SPY. In the SPY contract, this is the S&P depository receipts. You've already made a peak F. I should change that. Peak F in the monthly chart. That's a sell signal. You've already got a sell mode in the weekly chart. And all we're looking at 193.02 is there are 3 trades, out of 3 days next week. If 2 of the days sees the spike trading under 190, it would portend lower prices sooner rather than later. And we will get a test of the lower range of this. So those parameters I hope help you. And don't forget, go to my front page of TFNN, check it out. You can start getting my charts for this weekend. Have a wonderful weekend, everyone. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.